For decades, China has been one of the biggest holders of US government debt, shaping global financial dynamics in ways that many don't realize. At one point, China even held more US Treasuries than some of America's closest allies. But times are changing. Japan has now taken the top spot, and China is steadily reducing its holdings. So what's behind this shift, and what does it mean for the future of US-China economic relations? If you are interested in how global finance shapes power, hit that like button and share this video. Let's dive into it. When the US government spends more money than it collects in taxes, it borrows to cover the gap by issuing Treasury securities. These securities come in different forms, including Treasury bills, which are short-term, Treasury notes, which have medium-term maturity, and Treasury bonds, which are long-term. These government-backed securities are considered one of the safest investments globally. As of late 2024, US government debt has ballooned to $35.4 trillion, with China historically holding a substantial share. But why would China, a major global rival, invest so heavily in US debt? The primary reasons are safety, liquidity, and the dominance of the US dollar. US Treasuries are reliable with little risk of default, making them a secure way to store wealth. Additionally, they are easy to buy and sell in large amounts, providing liquidity. The US dollar's status as the world's reserve currency also means that holding treasuries allows China to manage its massive trade surpluses efficiently. China's buying spree of US Treasuries took off in the early 2000s as its economy exploded through exports. Massive trade surpluses led to an accumulation of US dollars, and rather than letting them sit idle, China's central bank, the People's Bank of China, invested them into US Treasuries. By 2013, China had peaked at holding over $1.3 trillion in US government debt. For comparison, Japan, another major trade partner, had long been a top holder but was overtaken by China in 2008. But here is where things started to change. China's US Treasury holdings have steadily declined to around $760 billion by late 2024. There are several reasons behind this shift. One major factor is the Belt and Road Initiative. China has been shifting resources towards this ambitious global infrastructure project aimed at strengthening economic ties across Asia, Africa, and Europe. Instead of parking money in US debt, China is financing railways, ports, and energy projects worldwide. In 2018 alone, China funneled over $50 billion into BRI project. Additionally, China has been working with BRICS nations to reduce dependence on the US-dominated financial system. By slowly moving away from US Treasuries, China aims to create a financial system less influenced by Western economic policies. This strategic move also aligns with China's increasing gold reserves. As China decreases its US Treasury holdings, it has been rapidly increasing its gold reserves, providing an alternative store of value, reducing exposure to US financial risks, and reinforcing its economic sovereignty. Another significant factor is China's increasing focus on domestic economic expansion. Rather than throwing up large amounts of capital in US debt, China has been funneling funds into sectors like technology, infrastructure, and industrial development. The Chinese government is also promoting the internationalization of the yuan, seeking to expand its role in global trade settlements and diminish reliance on the dollar. This is a long-term strategy that aligns with its broader economic ambitions, aiming to establish China as a financial power independent of Western influence. Before we explore the broader impact of this trend, drop a comment below. Do you think China's strategy is a smart move, or could it backfire? A large sell-off of US Treasuries by China could have serious effects. One of the most immediate consequences would be rising US interest rates. When China buys fewer Treasuries, demand drops, causing bond prices to fall and interest rates to rise. This means higher borrowing costs for the US government, businesses, and consumers. Another possible outcome is a weaker US dollar. If China were to aggressively sell its US debt, the dollar could weaken. While this might help American exports become more competitive, it would also make imports more expensive, leading to potential inflationary pressure. Market stability is another concern. US Treasuries are considered one of the safest investments globally. If a major holder like China starts dumping them, it could create market uncertainty, triggering fluctuations in global financial markets. That said, the $500+ billion daily trade volume in US Treasury market might help absorb these shifts. However, a rapid sell-off could still trigger panic in financial markets and cause short-term volatility. Beyond market disruptions, there are geopolitical ramifications. China's pullback from US debt can be seen as a challenge to America's economic hegemony. By reducing reliance on US financial instruments, China is signaling that it wants more control over its financial future. This move may also influence other nations to diversify their holdings, leading to a shift in global reserve currency dynamics. If fewer countries invest in US Treasuries, Washington may face greater difficulty financing its deficits, potentially leading to fiscal instability in the long run. The reality is, China can't simply pull out of US Treasuries overnight without hurting itself too. A sudden sell-off would reduce the value of China's remaining holdings and cause financial instability in global markets, which China itself relies on. However, the long-term trend is clear. China is diversifying away from US debt and reshaping the global economic order in the process. As tensions between Beijing and Washington escalate, this financial maneuvering will play a crucial role in the geopolitical chessboard of the future. This is a story that keeps evolving, and we'll be tracking it closely. If you found this breakdown useful, make sure to like, subscribe, and hit the notification bell so you don't miss our future deep dives. Thanks for watching.